Welcome to GP Bullhound Tech Thoughts. Today is the 9th of July, and we're here with Inge Heydorn and Johan Roslund for our weekly market roundup. Today, they will discuss how reopening after COVID will affect tech companies. Over to them.
Let's start with some market comments. It's quite an interesting week. We're all trying to find reasons why the market is weak, and especially why US Treasury yields are coming down so much. And I think the main reason would be that people now are really more worried about the Delta virus and the spread of that and the growth more than they are worried about inflation and the Fed. So I think that's the main reason why cyclicals are underperforming growth. Although we had a little bit of a turnaround on that yesterday with, profit taking in the marketplace, given that you had some profit warnings and you had some statements coming out saying that, like Teamviewer, which we'll come back to later, stating that they had a negative effect by the opening ups around the world.
It's happened a lot. And a big thing happened in the US, that the multi-billion-dollar defense contract called the JEDI contract that the Trump administration gave to Microsoft now is on the table again. What happened there?
Yeah, it's quite interesting, as it was won by Amazon firstly, then moved over to Microsoft, and now it's cancelled again. And the rumor is that the 10 billion contract, which is a really realistic big government contract, will be split out between more vendors. They're blaming the technology race, that they need better technology and more the latest technology, and that's why they're cancelling. It's a lot of political pressure around who's going to get that contract and part of it and so on, and American jobs and so on. So we will see where it ends up with, but my guess it's still going to be Amazon and Microsoft taking major parts of it, but I wouldn't be surprised if they squeeze in Oracle, Google and IBM for a part of the contract also.
So the rest of the players, but probably not Alibaba and the Tencent cloud, right?
Probably not, and I'll leave you to comment on Didi and the famous IPO.
Exactly. We talked about Didi last week when they were set to IPO, and just a few days after, China banned new downloads of the app. And of course, that's not good for the stock that plummeted, I think, 25%. And I think what's more interesting is how the Chinese government is going after the big tech companies, but also US listings. So remember, this was listed on New York Stock Exchange. And that also fired up the Chinese government there to press on privacy and data issues there. But main shareholders are Alibaba, Tencent, and SoftBank. They also went down a few percent on that day, not maybe on the Didi holding per se, but how the government acted.
And it's also quite interesting that they are chasing them one by one, almost, it feels like now. And the rumor again about Ant being chased now again by the regulator. So it's a very, very tough environment for Chinese internet stocks for the moment. And Tencent is almost flat now on a 12-month basis. So it's been tough, and it is tough for them for the moment.
Any news from Taiwan and TSMC?
Yes, TSMC numbers out this morning, up 32% month and 23% year over year in June. And as you can understand, this is the ramp down in May of the old iPhone and the ramp up of the new iPhone in June, which brings down capacity a little bit. But at normal, they are running at 100% for the moment. They are full. So this is just a ramp up and ramp down, and it's beating consensus a little bit. And going through all the Taiwanese numbers, which are out now, I would say June has been really, really, really strong, and we are also seeing some profit upgrades like Silicon Motion on the NAND side, and we have some weaknesses on the DRAM side and the mobile phone side, as we expected. We talked about that a few weeks back because of the weakness in China and the weakness in India. So I would say very, very much in line, the numbers coming out from Taiwan for the June. But with that stated, it is a very, very strong June quarter.
And going back to Teamviewer and what happened, or the reopening after COVID. So Teamviewer did a profit warning this week, and it's a software for remote controlling your computer. So they obviously got some headwinds from COVID. The share was down around 30%, so it wasn't a major, but we had some examples of the Swedish company Desenio that is selling posters, so home decorating. They went down almost 50% on their profit warning. What is interesting was that they said that the traffic and sales was down almost 50% in June versus their expectations. So we could probably see some more marketplaces and e-commerce players having a difficult month of June, and also throughout the summer, both due to reopening, and also maybe we have had good weather in some key markets for Desenio. Any other comments on the reopening difficulties for some tech companies, Inge?
I think it's Teamviewer. If we just look into the details there, I think it's quite interesting the fact that they state that the churn is very, very low. So it's just a renewal rate that's been hit by the fact that people are a little bit more cautious. And I would say it's interesting. I don't know if many people know that, but I own a number of paddle halls in the Nordics and so on. And we also seen a major shift from really strong demand to almost empty paddle halls in June. So I think in general, what we've seen is a major shift from last year to this year, how people are spending their time. And I think that's going to have a major effect on many companies coming in the July numbers. So it's going to be really interesting to see and to follow.
Maybe a bump in the long term line, because we all think that e-commerce and paddle are great businesses to be in, but we should be cautious both on difficult comparables but also high valuations in those sectors. Any final comments, Inge?
I think we have done almost all our work around the quarter, also the quarter end, and what stands out a little bit, gaming is going to be a little bit better than expected. Semi-capital equipment had a blow away in May. We still haven't got the June numbers, but we have accelerating growth Q2 over Q1. And bear in mind then, it's not new factories, this is just capacity adds. So the new factories coming for 2022. So that are really the key takeaways so far on Q2 data where we're collected in for the Q2 results now in July. And now we're going on vacation, aren't we, Johan?
Yeah, great summary. We will be back the 13th of August, so Friday the 13th. That can't be a good day to start, but that's the next episode, unless we do a special episode if we find anything that we really need to talk about. So until then, have a nice summer, and thank you, Inge and Maria.